The world is in constant flux, with changes happening at a rapid pace that affects every aspect of our lives. And the financial world is no exception. The global financial landscape is continuously evolving, influenced by technological advancements, geopolitical shifts, and economic policies. For decades, the US dollar has reigned supreme as the world's reserve currency. This dominance has provided the United States with significant economic advantages, including lower borrowing costs and increased global influence. This means that most international transactions, from oil deals to foreign investments, have been conducted in dollars. The dollar's stability and liquidity have made it the preferred currency for global trade and finance. However, the winds of change are blowing. Emerging economies are growing in influence, and there is a push for a more multipolar financial system. There's a growing conversation about de-dollarization, a shift away from the dollar's dominance. Countries like China and Russia are advocating for the use of alternative currencies in international trade to reduce their dependence on the US dollar. This isn't just an abstract economic theory, it has real-world implications for everyone, from multinational corporations to everyday investors. A shift in the global currency landscape could affect exchange rates, investment strategies, and even the cost of goods and services. Understanding this shift is crucial for navigating the future of finance. Investors, policymakers, and businesses need to stay informed about these changes to make strategic decisions. In this essay, we'll delve into the concept of de-dollarization, explore its potential impact, and consider what it means for the average citizen. We'll examine the factors driving this movement and the possible scenarios that could unfold. Let's begin by understanding what de-dollarization really means. De-dollarization refers to the process of reducing reliance on the US dollar in international trade and finance. This can involve using other currencies for transactions, diversifying foreign exchange reserves, and promoting regional financial cooperation. In simple terms, de-dollarization refers to the process of reducing the use of the US dollar in international transactions. This concept has been gaining traction in recent years as countries and businesses explore alternatives to the dollar for various reasons. Think of it like this. Imagine a world where countries and businesses increasingly rely on other currencies like the euro, yuan, or even digital currencies for trade and investment. This shift could lead to a more diversified and potentially more stable global financial system. This shift away from the dollar could happen gradually or more rapidly, depending on various factors such as geopolitical events, economic policies, and technological advancements. For instance, a major geopolitical conflict or a significant technological breakthrough in digital currencies could accelerate the process. The reasons behind this potential shift are complex, but they boil down to a few key factors. One major factor is the desire for economic sovereignty. Countries want to have more control over their own monetary policies without being overly influenced by the US Federal Reserve. Some countries are seeking to reduce their dependence on the US and its monetary policies. This is particularly true for nations that have experienced economic sanctions or other forms of financial pressure from the US. Others are looking for ways to mitigate the risks associated with a single dominant currency. By diversifying their currency portfolios, they can better manage financial risks and reduce their vulnerability to economic shocks. Regardless of the reasons, the implications of de-dollarization are far-reaching and deserve our attention. A world with less reliance on the US dollar could lead to significant changes in global trade dynamics, investment flows, and even geopolitical alliances. Historically, we've seen the rise and fall of dominant currencies. The British pound, for example, was once the world's primary reserve currency before being overtaken by the US dollar. Understanding this historical context can help us better grasp the potential future of de-dollarization. Emerging markets play a crucial role in this shift. As countries like China, India, and Brazil continue to grow economically, their currencies may gain more prominence in international trade. Additionally, new trade agreements that bypass the US dollar could further accelerate de-dollarization. Technological advancements, particularly in digital currencies and blockchain technology, are also key drivers. Digital currencies offer a new way to conduct transactions that could bypass traditional banking systems and reduce reliance on the US dollar. Financial experts are closely monitoring these trends and making predictions about the future of the global financial landscape. While it's difficult to predict exactly how de-dollarization will unfold, it's clear that the world is moving towards a more multipolar currency system. In conclusion, de-dollarization is a complex and multifaceted process with significant implications for global economic stability. As we move towards a more diverse financial system, it's essential to stay informed and understand the potential impacts on international finance. As someone who has spent a lifetime navigating the complexities of the financial world, I, Warren Buffett, believe it's essential to pay attention to these shifting tides. The financial landscape is ever-changing, and staying informed is crucial for anyone looking to make sound financial decisions. Over the years, I've seen markets rise and fall, economies boom and bust, and through it all, one thing remains constant: the need for vigilance and adaptability. While predicting the future is always a fool's errand, understanding the potential scenarios can help us make informed decisions. It's not about having a crystal ball, but rather about being prepared for various outcomes. By studying market trends, analyzing economic data, and staying abreast of global events, we can better position ourselves to navigate the uncertainties that lie ahead. This approach allows us to make strategic choices that can safeguard our investments and ensure long-term growth. I've often said that diversification is key to mitigating risk, and this principle applies not only to investment portfolios but also to currencies. Diversification helps spread risk across different assets, reducing the impact of any single investment's poor performance. This strategy is equally important when it comes to currencies. By holding a mix of currencies, we can protect ourselves from the volatility and fluctuations that can affect any one currency. This approach provides a buffer against economic instability and helps maintain financial stability. Relying too heavily on any single currency, even the mighty dollar, can expose individuals and nations to unforeseen risks. The global economy is interconnected, and changes in one part of the world can have ripple effects elsewhere. By diversifying our currency holdings, we can reduce our vulnerability to these shocks. It's important to recognize that no currency is immune to risk, and having a balanced approach can help mitigate potential losses. Now let's explore what a world with a less dominant dollar might look like. Imagine a global economy where multiple currencies share the stage, each playing a significant role in international trade and finance. This shift could lead to a more balanced and resilient economic system, where no single currency holds disproportionate power. Such a scenario would require careful planning and cooperation among nations, but it could ultimately lead to a more stable and equitable global economy. As we consider these possibilities, it's essential to remain open-minded and adaptable, ready to embrace the changes that the future may bring. A world where the dollar is no longer the undisputed kingpin of global finance would undoubtedly look different. For starters, the US would likely lose some of its economic and geopolitical leverage. The ability to impose sanctions, for example, would be less effective if other currencies were widely accepted alternatives. On the other hand, a more multipolar currency system could lead to greater stability in the long run. Just as a diversified investment portfolio is less vulnerable to the ups and downs of a single stock, a more diversified global currency system could be more resilient to shocks. Section 5. Winners and losers in a de-dollarized world. As with any major economic shift, there will likely be winners and losers in a de-dollarized world. Countries with strong economies and stable currencies, such as those in the Eurozone or China, stand to benefit as their currencies gain prominence. On the other hand, countries with weaker economies or those heavily dependent on the US dollar could face challenges. The key takeaway here is that diversification is crucial. Now let's bring this down to earth and consider how these global shifts might affect the average person. Section 6. The impact on everyday life. For the average citizen, the impact of de-dollarization might seem distant at first. However, it could eventually trickle down to everyday life in various ways. For instance, if the dollar weakens, imported goods could become more expensive, leading to higher prices for consumers. On the flip side, a weaker dollar could make American exports more competitive, potentially boosting the US economy. Travel abroad could become more expensive if the dollar loses value, but it could also make the US a more attractive destination for tourists from other countries. Section 7. Preparing for a new financial landscape. So, how can individuals prepare for a potentially de-dollarized world? As always, diversification is key. Consider holding assets in different currencies such as euros or yen to hedge against fluctuations in the dollar. Investing in gold, a traditional safe haven asset, could also provide some protection. Ultimately, staying informed about global economic trends and making sound financial decisions based on your individual circumstances is paramount. Let's zoom out and consider the broader implications for the future of money itself. Section 8. The future of money, a global perspective. The conversation about de-dollarization is part of a larger trend, the evolution of money. From bartering to gold coins to paper money and now digital currencies, the forms of money we use have constantly evolved. Cryptocurrencies, central bank digital currencies, and other technological innovations are challenging the traditional notions of money and finance. While it's too early to say what the future holds, it's clear that we're entering a new era of money and finance. Section 9. Conclusion. Navigating the uncertain seas of finance. The future of the US dollar and the global financial system is uncertain. However, by understanding the forces at play, we can make informed decisions and navigate these uncertain waters with greater confidence. Remember, diversification, both in terms of currencies and investments, is key to mitigating risk. Stay informed, stay adaptable, and never stop learning. The world of finance is constantly evolving, and those who embrace change will be best positioned to thrive.